All right, everybody, welcome back to the Simple Markets channel. My name is JB, and today we're going to be going over the start of my month for 2025. I'm going to talk about my trades, what I was specifically looking at, things to avoid, and things to pay attention to. As you can see, overall, we've had a pretty clean and consistent year in 2025. My equity curve is nice and smooth. Yes, we experienced some drawdown here and there. We did have a little bit of a losing streak going into November, and clearly I don't want this year to end because I was looking at my journal and realized that for the whole month of November so far, I've been logging it as September. I honestly have no idea why, and I clicked record and realized that as well. So we are going to be going over mainly these trades today. I'm going to be leaving out Euro NZD. It's just a basic break-even trade, so I don't feel the need to really go over that. We'll keep AUD CHF in there though, because I do have an active trade running after this break-even took place. But as you can see here, from the beginning of the month, we were sitting at around a 92% balance, and we are now sitting at a 97% balance for just under about a 6% gain. As you can see here, we had 3 losses, 2 break-even, and 2 winning trades. But without further ado, let's go ahead and hop over to the charts. Now we can see fairly clearly here that NZD JPY is a loss, but nonetheless, what I was looking for is essentially following that bullish trend I saw. I see the break of structure of the high here, fair value gap, and the sweep on liquidity of this general consolidation or this candle low. So I throw my fib on there and price works its way back down. It taps me in. We do get a pretty good reaction out of this zone. Not enough to get me to that break-even level, and then we fall through for a negative 1R. This, to me, honestly, was a picture-perfect trade. I would have taken this again 100 times in a row, regardless of the loss. Remember, guys, that is what we teach here at Simple Markets. It is all about probability and repetition. I don't sit here and deep dive with analysis on what I could have done differently or why this trade lost and why my other trades win. I could sit here and find a million excuses for why this trade lost. I've never even zoomed out on this pair, but if I do, now I can sit here and say, oh, you know what? There was obviously liquidity resting above this high, and then after taking that liquidity, we wanted to go and grab liquidity at the lows. Is that technically correct and proven with SMC theory? Yes, I've studied plenty of SMC theory for maybe 4 years now before building a plan this simple and realizing that the majority of it can be left behind and having a simple, profitable system. If I applied that theory, could I have left out this one trade maybe? Sure, of course. But using a 3 risk to reward, I understand that missing on those winning trades is 3 times as detrimental as trying to nitpick and avoid losses. Most of you out there keep that in mind. You are probably not in a place where you need to nitpick and avoid your losses. You're in a place where you need to maximize your winning trades that you're taking. And a lot of that comes down to that discretionary nature of the multi-time frame analysis or complex smart money that you may be using. Next up here on the list is CAD JPY. Now, this one very basically as well, almost an identical trade to NZD JPY. Do I really care that the pairs are correlated? I do not. Euro JPY, you could say, is correlated as well. But nonetheless, because in my backtesting data in my studies, it has shown profitability over the course of multiple pairs, regardless of correlation. And another important aspect to understand is, yes, I did lose these 3 JPY pairs in this case, but I won the USD JPY pair, so it goes and negates all 3 of these other losses. If you are the person who cares about correlation and you, for example, wanted to nitpick and say, I would rather take NZD and Euro JPY because they look the best, you would now have the chance of missing out on USD JPY and you would be overall -2 on this scenario as opposed to me being at +0. From a probability standpoint and understanding our win rate, it is much, much better to just continue taking those repetitions, keep the number of trades high, limit the amount of discretion and picking and choosing this quote-unquote A+ setups that a lot of traders tend to teach. Not much to go over here on CAD JPY. We had a good sweep on liquidity, a break of structure, a fair value gap, and then once again, we just kind of quickly ran through that stop loss. Liquidity was eventually grabbed here, and we see that reaction to the upside. Now, Euro JPY is honestly very, very similar. We kind of saw that same bullish trend. I had my range marked out with my highlighter tool. We had the fair value gap. We had the break of structure. The sweep on liquidity is a little bit less prominent here. This low here is technically a sweep on liquidity, as well as even these highs that are formed here. Price in general just comes back very aggressively, grabbing internal liquidity and then breaking structure to the upside, giving that fair value gap. All my rules were met, so I went in on it, taking my 3rd loss of November. So for those of you keeping up, we came off of 2 losses at the end of October here. We had a break-even trade, and then 3 more losses as well in the start of November, and then another break-even trade, for an overall drawdown of about 5 trades, or on my personal account, about 10%. This does not sway or phase me, and this is the kind of trust and confidence that you need in your trading plan, and honestly, the only way to get that confidence is through backtesting and consistent data and usage of your plan. I've been using this plan for 3 years. I've seen much worse drawdown periods than 5. I think we even experienced 7 in right here in the end of July into early August. So it's nothing new to me to lose 5 trades in a row, and I understand that probabilistically speaking, I have a higher likelihood of winning the next few trades because that is how win rate and probability distribution work. And lo and behold, we wipe out the entire month of November's losses so far, as well as those last 2 if you want to look at it that way, for that overall net gain this month of about 6%. So yes, you can actually lose 5 trades in a row, not change anything on your trading plan, not make any new complex analysis, and then follow it up by 2 winning trades for a 6% gain only a week into the month. The next trade we're going to take a look at is AUD CHF. Now this one was my break-even trade, this first one. I'm currently in this short position as well. But for the break-even trade here, we just saw the sweep on liquidity and we saw price aggressively break downward, showing intention to possibly shift that trend. I simply just set my fib at the 75% of the range, and very quickly there's a tiny wick in here, but it did hit my break-even level and then come back up to take me out right here. And then actually right after that, as a bonus trade we can go over, there's a break of structure here, a sweep on liquidity, fair value gaps. So as always, I took my fib, I set it at that range, and we tapped in very nicely here and actually moving with some good volume to the downside. Now, next up here is USD JPY. It's honestly a very similar trade to AUD CHF here, where I saw a sweep on liquidity, where this wick grabs the high over here, and then we break structure to the downside. I simply set my order. We have the fair value gap here. We have the break of structure. Everything is met, and this one was very quick and easy. We tapped in and then very quickly reached my take profit level, and then right after that, we actually ended up moving up and making higher highs. Now, last but not least on this list is AUD CAD. Now, I saw this break of structure originally on AUD CAD showing a possible reversal, but unlike the other 2 setups that we just looked at, there wasn't a fair value gap present in this range, so I was not able to take it, despite it actually working out fairly well. But the next trade here is a sweep on liquidity, a break of structure to the downside. It gives us that fair value gap that we need, so I went ahead and set the order. Price taps us in and then very quickly and easily once again reaches that take profit level. So that is all of my trades so far in November. I do have some trades that are kind of working and currently running at the moment. Since I started this recording, I'm at about break even on Euro AUD, and I have a little trade assistant that takes my stop loss and moves it just above break even to offset spread and commission. It just helps me manage it without having to be on the charts and look at every individual trade as they're going on. Honestly, a really worth investment, and I think there's even free options out there that a bunch of my students use. If you're interested in them, shoot a comment below. I can link the free one that I know some of my students use and enjoy it. I use a paid one personally, but honestly, if one of them works for free, I think it's a better option. It's fantastic for that peace of mind and being able to have that more passive trading style, which of course we love on the 4-hour. Euro GBP is in a similar situation. We just saw the sweep on these equal lows here. We broke structure to the upside, and then we were just kind of looking for that next higher high to hopefully form. Let me know. I hope you guys enjoyed the breakdown. Let me know in the comment section which trades you did and didn't take here. If there was any trades you feel like I missed this month, feel free to let me know. I'll check out the ones that you took. And as always, if you guys have backtesting or live trading data that you want me to review, send it to me on Discord. I'll go over it. I'll help you out. I'll give you the pointers that I can based on my experience in the markets. I don't mind helping out and answering DMs. I'm always active on there. My Discord is always listed at the beginning and the end of the video here, so feel free to use that. As always, thank you guys for watching. I appreciate you tuning in each week, and I will see you guys in next week's video.